Welcome to this week's look at the state of the New York City real estate market. This is for last week, July 21st to 27th. We'll take a look at the luxury market, the Manhattan market, and the Brooklyn market. Then at the end, I'm going to wrap it up, share some additional information with you, as well as strategies to help you be successful in this market, whether you are a buyer or a seller. Let's get started with the luxury market. There were 25 contracts signed last week, and that is 4 fewer than the previous week. The number one contract was a townhouse at 22 East 10th Street, asking $15 million. It was reduced from $20 million when it was listed back in April of 2024. It is a 25-foot wide, 5-story house that has been essentially gutted, and it is being sold with architectural plans that allow for it to be expanded from a almost 5,600 square foot home to an 8,000 square foot home. So the owners purchased this townhouse for $15 million in 2021. They were going to combine it with the neighboring house at 24 East 10th Street, which they had also purchased for a little over $10 million in 2017. Ultimately, they just gave up on the idea of a townhouse combination and sold 22 East 10th to a local developer. I actually remember when this was all happening, and on the one hand seemed to be a very exciting proposition, this idea of a combination in such a prime location. However, it did gradually become apparent that things were not working out quite so well. So now here we are in 2025, and 22 East 10th Street has now changed hands once again. The number 2 contract was the 5th floor at 16 Fifth Avenue. It was asking a little over $13 million. Started marketing in December. It is a new condo. It has 3,727 square feet. It includes 3 bedrooms and 4.5 bathrooms. Great room, dining area, large kitchen with an island, all overlook 5th Avenue. The amenities in this 14-unit new condo building include doorman, fitness center, storage, residence lounge, and catering kitchen. The total weekly asking price sales volume, $166,449,000. Average asking price, $6,657,960. Median asking price, $5,500,000. Average discount from original ask to last asking price, 11%. And average days on the market, 532. That's it for the luxury market. Any questions about the luxury market, post them below. Really interesting, we're well into July and still we are seeing a relatively solid, steady, strong showing in the luxury market. So we're going to take a look now at what is happening in Manhattan and Brooklyn. So in Manhattan, just as an overview, we are really starting to see solid signs of seasonality, meaning the supply is ticking down, the demand is ticking down, the new supply coming on is ticking down, and contracts signed also ticking down. Again, if it sounds like summer, it's because it is. And, even though the liquidity remains a few percentage points above where it was last year, it is ultimately trending a bit lower. And look, if you're a buyer, that could be helpful. If you're a seller, it's likely to be kind of quiet for a while. So why don't we get into the specifics about the Manhattan market? The supply for last week, 215 new properties came on the market. That is down a little over 20%. Contracts signed, 206, up just a little over 1%. Off-market properties dropped actually just under 15%. 179 properties came off the market last week. The supply for the month in Manhattan, 1,018 properties came on the market, down 34%. Contracts signed, 877, down a little over 15%. Off-market properties, 844, up almost 18%. And the Market Pulse reading, this balance between the supply and the demand, is showing that we are just squarely in the middle, neutral. It is up just a smidge from last month. It is down just a smidge from last year, but for all intents and purposes, we're in this kind of balanced market, pretty neutral. The liquidity pace chart, 877 contracts were signed over the last 30 days. That is down a little over 12% from last month and up a little over 1% for last year. Now, I'm going to get into some additional information at the end of this report about what's going on in Manhattan, but we're going to take a look right now at what is happening in Brooklyn. And then, as I said, I'm going to share some additional information with you about kind of the entire market, mortgage rates, and strategies to help you be successful. So Brooklyn tells a slightly different story from Manhattan. Yes, we are still in the same season of summer, and the supply has remained largely unchanged since last week. However, the overall demand and contract signed seem to be recovering a little bit since the 4th of July holiday. We do have several weeks of summer ahead. Brooklyn seems to be performing differently than in Manhattan, and the market seems to be doing slightly different things. We're not seeing specific trends, but we'll get into those details right now. Supply in Brooklyn, 166 for the week. That is down 14%. Contracts signed, down almost 10%, 113. Off-market properties rose just a little over 4% by 75. And for the monthly supply in Brooklyn, the new properties, 698, down almost 27%. Contracts signed, also down about 30%, 475. Off-market properties, 337, rose almost 17%. The Market Pulse in Brooklyn, this balance between supply and demand, shows there is a little more supply than there is demand, at least according to this chart, slightly favoring the buyers. And the liquidity pace chart, this 30-day moving window of contracts signed, 475. That is down, almost 27% from last month, down a little over 13% from last year. There are some strange goings on in both the Manhattan and Brooklyn market. Manhattan performing a little more, let's call it on trend, as we would expect it to. Brooklyn doing some different sorts of things than we would be expecting. But let's wrap this up now, and I will share some additional information with you that could well be helpful if you are an active buyer or seller. Any questions, post them below or reach out to me directly as Sotheby's. So where are we at for last week? Well, we had 25 contracts signed in the luxury market. That is down 4 from the previous week. 3 were at the trophy category level, meaning priced at $10 million and above. 16 were condos, 6 were co-ops, and 3 were townhouses. 16 were uptown, 9 were downtown. As I said, the Manhattan and the Brooklyn markets, they are each in their own way showing signs of seasonality, but they are different from each other right now. The supply in Manhattan, 6,000 3,588. In Brooklyn, 3,468. Pending sales in Manhattan, 3,339. Brooklyn, 2,164. Off-market properties in Manhattan, 3,684. Brooklyn, 1,738. Average days on the market in Manhattan, 65, and in Brooklyn, 47. Liquidity Pace, this 30-day moving window of contracts signed, Manhattan, 877, and in Brooklyn, 475. If we take a look at what is going on with the mortgage rates, this latest chart is showing that the 30-year jumbo is moving up a little bit, and the 30-year conforming staying kind of relatively the same. The mortgage interest rate charts that I've been sharing have largely remained the same with some slight fluctuations. So I just wanted to be sure that I'm including these in case you are in the market and you are financing and you're about to enter the market and you're just keeping an eye to see how these rates are doing and whether they will work for you. So there are some charts that I'm going to share with you now that have to do with the divide between the luxury market and the rest of the market. This luxury market, as you've heard me say, is truly enjoying a kind of an extended run, going well into the summer. And the non-luxury market has remained below seasonal trends since the mortgage rates began increasing in 2022. Definitely makes a very big difference to buyers if they are financing versus paying cash. We're seeing, that could be one explanation for it, although I don't think it is the whole story. I think that those luxury properties are selling basically to an audience of buyers that feel very secure about their financial position, and they perhaps just want to diversify their portfolios a bit, have less in the market, the stock market, and put some into the real estate market. As I mentioned previously, last week actually, we are beginning to see more foreign investors coming back into the market as the dollar declines, and we're seeing this kind of renewed interest on the part of the foreign buyers because New York City real estate is starting to look like a good buy again. This means largely what it has meant, I would say, over the last month, and that is if you are a seller and you want to get your deal done and you don't want to wait around till the fall, if you're not getting the action that you want, offers, traffic, etc., pay attention to the feedback that you're getting. If there are things that need to be done that are in your control, do them, including adjusting your asking price. Asking price is not the selling price. It is part of the strategy to get buyers excited to come see your property and make offers. Buyers, this is a very interesting time for you. If you see things that you like out there, don't wait around. The fall is unlikely to change things too much, other than the fact that it may not be around in the fall because the seller may decide they're not going to sell anymore, or somebody else will buy it. You'll also have more competition in the fall. That means you'll probably have a little less leverage overall. So if you find something you like right now and the rates work for you, or you're paying cash, this could be a very, very good time for you. All right, that is it for this week's look at the state of the New York City real estate market. As always, my thanks to the Olshan Luxury Report and to Urban Digs. The work they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.